Jerry wants to talk about one of his favorite things in the world, derivatives.
What is a derivative?
Well, and it's really not his favorite thing in the world, but this is our investing primer, our investing discussion of the week. What is a derivative?
It's a much maligned instrument. All it simply is, by its name, is it's a contract of sorts that's based on some underlying either commodity or stock or yeah. I mean, those two would work just fine. Uh, Probably the historically best example of what a derivative is the forward contracts in the agricultural world, where farmers put their whatever their crop is in the ground, and it's not going to come up until maybe they plant in the fall and it comes up in the spring, so 6 months later, and they want to lock in whatever the prices are. Say they're growing corn and they want to lock in the price that you're getting for corn now, but they're just planting. It's not going to be coming out of the ground for 6 months or however long it takes corn to do it, from fall to spring, let's say. And they will enter into a forward contract, which is a guarantee that they will be delivering X amount of corn for the specified price in the fall. That is a form of derivative. The futures market was born in the agricultural forward contract world. There's a reason why the Chicago Board of Trade is the most, what historically was the most popular commodities trading exchange and futures exchange, because it was all based on sugar, corn, wheat, pork bellies, and then the Chicago Mercantile Exchange moved on to copper, gold, silver, the platinum, palladium, the various metals contracts. So all a derivative really is a contract for future delivery of something. Could be like I said, could be a block of gold. It could be a bushel of corn. It could be a pound of sugar. And those derivative contracts then migrated to stocks, where you would have a derivative contract on a stock, and that's a form of derivative on stocks would be the famous puts and calls. You buy a put when you think something's going to go down because it's an agreement to sell at a certain price. You buy a call when you think things are going to go up because it's an agreement to buy at a certain price. So if you think the price is going to go up, but you don't want to buy the stock, and you think it's going to go up over a 6-month period of time, you'll buy a call option because it's guaranteeing the price today, kind of similar to what the farmer did for delivery of that stock in the future. That's all it is. It's been much maligned. There's nothing in and of itself that's evil about derivatives. It's just the use of derivatives has tended to get out of control. When you start throwing leverage into the use of derivatives, perhaps derivatives on very esoteric, bizarre, exotic types of instruments or underlying entities and or products or commodities
Or weather patterns?
yeah, I mean, that starts to get that's where things start getting in trouble. I'd say more than anything, it's just good old fashioned leverage that tends to get the derivatives world in trouble. Um, in and of itself, it has its useful function. They can have their useful function for the right purpose.
Derivatives can be very volatile. If you're buying an option to buy shares of, let's say, NVIDIA, that's going to move much more violently than just the shares of NVIDIA itself, because there's their time value. Those options expire.
Right.
And when you buy an option to buy NVIDIA, $300 a share, then that means that you have the right to only pay $300 a share for NVIDIA, no matter how high NVIDIA is trading. But if NVIDIA is only trading at $285 a share and you're getting close to the expiration date of that option, those options are going to lose their value. And to Jerry's point, Jerry, did you know that part of the reason for Southwest Airlines' success has been its fuel hedging?
I don't doubt it. I mean, there's lots of companies that have done successful hedging strategies. I would caution though, because there was a company back in the day called Enron.
Yes,
And For the longest time, Enron was coming up throughout the 90s. Enron was coming up through our growth screens, and we kept scratching our heads going, what in the heck is this Houston utility doing that they're making so much money? And dig deeper, find out that what they were really doing was just trading energy contracts. I mean, it wasn't, this sleepy little utility got, for a while, the advice to go out and play the energy futures game. And eventually the rest is history, and it backfired on them big time. And then, they tried to cover it up, I guess. And that's actually quite a sad and tragic tale. We won't get into that, but my point is that there's an example of where it can run awry. It can really cause problems. And it usually has to do with leverage. There are people borrowing to do, it's already, Doug just mentioned the level of volatility that you live with in the futures and options on futures and options on stocks market, right? Because it's a time value that ticks away. They all have an expiration date on them, and they're usually in the matter of months, maybe even weeks. It's expiring tomorrow, and you're really taking a flyer. I think something's going to happen with this tomorrow, and I'm buying an option that's going to expire tomorrow. I'm buying a future that's going to expire tomorrow, and boom, then it's gone. Your money's gone if you bought a contract on that. There's a reason. It's kind of similar. There's an analogy to the life insurance, the whole life insurance, commentary we made earlier. There's a reason why the people who make the most money in options are the people who sell the options, or what is another term for selling an option is writing an option. In other words, they're the creators of the option. They're the one that's saying, so you think NVIDIA is going to go from 350 to 450 over the next 3 months? I've got an option for you. And they sell it to you for $5 an option or whatever it is. I'm making this all up out of thin air. And then you wait. And you wait and you wait and wait and wait and wait. And 3 months later, NVIDIA is only at $400 a share. Darn. Well, thank you very much. I don't owe you anything. You bought that option from me. You gave me $5 for it. Sorry, but it's not in the money, and I'm going to walk away with my $5. I think it's something like 95% of all options go unexercised, maybe even higher than that. So the people that really rake it in that game are the ones that are writing options or selling options, and get the suckers that think they're right about something going up or they're right about something going down. Obviously, there's a high risk in that to the extent that if it does work against them, then they're going to owe a bunch of money.
Yep. It's like not buying life insurance. You can save money on premiums by not buying any life insurance, but if you die, then something your family's in a bad way.
We're all going to die.
Yeah.
If you can reach an untimely death. Anyway,
well, tying that back into life insurance, though, again, I read and I corroborated this, that a pretty healthy portion of the benefits provided to the ex-Enron executives was life insurance policies. So that's not a commentary on the ethics of life insurance. I just point out that whether you're a saint or a scoundrel, life insurance has been used by people for creative estate planning and for juicing up compensation. So the fact that their life insurance policies were part of the compensation has nothing to do with the ethics of what Enron was doing to make that money, mind you, which was completely smoke and mirrors, as derivatives sometimes are.
And I urge people to look into the actual story behind the Enron, because there's much more to it than meets the eye. And I suspect, we won't get into the details, but I suspect there were probably a lot of folks that ended up going down with that really didn't deserve to. Maybe they were guilty of being gullible. But it was quite sad. It was a very tragic story.
Definitely very tragic. And part of the problem, I think, is that people didn't ask questions because everyone was making money. Yeah. So I think there are obviously a lot of people who willfully misled others. But
that was one of the things that I point to in our history of portfolio management, where we just finally just said, there's no way this doesn't make sense. When we tried.
Did you look at Enron?
Oh, hard. And we came close, but still couldn't get past that. This just doesn't make sense. And we've seen a few others since then, names not mentioned, that had similar kind of situations that it's just like, no, this is not their business.
Not to put you on the spot, but can you think of an example, maybe you can't, of a company where in the moment you were thinking, this does not make sense. And then in retrospect, it turned out to be totally legit and it did make sense? Or is every time your Spidey signal's gone up, it's been.
I have to say that no. I mean, it's not to say that we passed on things that we wished we hadn't in retrospect, but not because we thought it was not because we thought it didn't make sense. It was just because we were like, well, I don't know that that's a business that I want to be in. Mistake. Usually, it was because we overthought it, and it was too simple, and we thought, oh, can they really, is this really going to be anything all that special? And then, it turns out to be really good.
But you've never had the reverse Enron where it's like, oh, this doesn't make sense, and then in retrospect, it's a
no. When we have smelled a rat, we've been right about it.
Okay. Gotcha. So not too many false positives on the smelling a rat.
No.
All right. There we go again with the obligatory. Jerry, anything else you want to say about derivatives or life insurance or Enron or fraudulent businesses?
I think we're good.
That brings us to the close of today's show. Please remember to view us. Well, you're viewing us here on YouTube. Like and subscribe. Also, tell a friend. Instagram, taylorfrigon.invest. And, of course, our website, taylorfrigon.com. Until next week, I'm Doug.
I'm Jerry.
And have a blessed Advent, and we will see you in 7 days.